Hi, this is Jack Miller from Gelt Financial. I hope you're having a fantastic day. I wanted to make this video and talk about how a real estate investor can obtain 100% financing. We get these calls all the time, and it's a complicated issue. And I'm going to go through 4 examples that we do fairly often. But I want to preface it and first say that it's not for every deal. Sometimes we say, oh, we do this or we do that, and borrowers get frustrated because we don't do it on their deal. And it's because there's a reason we don't do it on their deal. But let me start off and let's focus on how you can get 100% financing. I have to tell you, and just to give you a little background, when I started, I was very young in my teens, and I started off buying properties with 100% financing. So I did it. I didn't have 2 pennies to rub together. I didn't have 1 penny to rub together. So we did it by being very creative. And you can be creative if it's a good deal. If it's a good deal is the key. So let's talk about a couple common ways. And these are all ways that we do. They're not abstract ways. They're not ways that they teach you in the school somewhere that's not practical. These are things that we do at Gelt Financial all the time for real estate investors. So the first way, the easiest way, and the most common way, I don't want to say the easiest, is if you already own another property that has equity in it, you can cross-collateralize it or blanket it. So just as an example, let's say you're buying a property for $100,000, and let's just say it's worth $100,000, and you own a property worth $300,000, and you have $100,000 first. So one of the ways we can get you that 100% financing is to put a first on the subject property that you're buying for 100, and then put a blanket loan on the other property that you owe 100 and it's worth 300. That's a common way, and I'm just using round numbers just so you can get the idea. So if you own another property with equity, and it's real equity, not just pie in the sky equity. Don't call me up and say, oh, we have a property, it's worth $28 million and it's really worth, 50 grand. If it really has equity, you could blanket that property and do 100% financing. Very common way. We do a lot of blankets here. We've always done a blanket. Some people call them blankets. Some people call them cross-collateralization. But we've done that for many years, and we've made several videos on blanket loans and cross-collateralization loans. So that's one way. By the way, what we see sometimes is if you do not have a property with any equity in it, but you have a friend or a partner that has a property with equity in it, and you find the subject property, maybe you bring someone in the deal as a partner and use their property with equity in it. So again, you find a great property, you're paying 100 for argument's sake, you don't have any other properties or nothing with equity, you find someone and make them a partner in your deal who has a property with equity, you blanket that or cross-collateralize that. Easy deal, we do it all the time. So that's one way, very common. I apologize, my throat's dry. I know some politician got in trouble for doing that. I apologize. I'm not running for office, so I can't get in trouble for that. I think you'll understand. Another way is, and again, we do it fairly often, is you do a first for us. Let's say you're buying a property for 100. And again, in these examples so far, I'm using the properties are worth what you're paying. We're going to talk about after if they're worth more, because that's really a fantastic way and probably the best way. But if you're buying a property for 100 and you come to us and maybe we'll do a 65 LTV, which is common for us, but you get the seller to do a second for, let's say, 40%. Let's just say, keep it round numbers. So maybe the seller will hold a second for 40,000 and we'll do a $60,000 first. Or we'll do a 65 first, the seller will hold for 40 and you have $5,000 toward the closing cost. Now, we don't do that in all cases. We want to make sure that it's a really good property and you're committed to it. But we do allow 100% with seller seconds on some cases. And where we usually make the decision is, if it's a property that we really like and has a real value, we'll do it. If, on the other hand, what happens fairly often, I'm not saying anyone watching this would do it, they find a property, it's worth 100, They jack up the sale price to 150, and they bring it to us and they say, oh, we're paying 150. The seller's going to hold a second for 50. We want you to be in for 100. That we're not going to do. And so we really focus on what the value is and what our basis is. Again, we're not going to do it on all cases, but we do it quite a bit all the time. We're closing deals like this. And the second thing is we want to make sure that if something goes wrong, that you're committed to the deal. So if, for example, if it's a rehab that requires a lot of work, we may not do that deal, because if something goes wrong and you walk, we don't want a property that's half done that's a rehab. But if it's stabilized, we may do it. So again, just another tool in the tool chest so you're aware of. Again, a lot of people make a lot of money getting 100% finance, including me. We buy real estate and sometimes I get 100% financing by being very creative this way. Nothing wrong with it at all. You just have to have, it's like anything else. It's a tool in the in your tool chest. You have to know when to use each tool. So that's what I'm trying to outlay here for you. The third way, which is really, I think, the best, or one of the best, they're all good, I shouldn't say the best, I don't want to be favorites to it, is buy a property below market value. So use my same scenario. Let's say you're buying a property for 100,000, but it's really worth 200,000. How does it happen? It happens all the time. We see deals all the time like this, because you're aggressive, you're buying it, you know people, you're in the right place at the right time, you're passing on 99 deals to get one deal, which you have to do. Don't think you're going to get one for one. You have to probably look at 100 deals to get one. But if you're lucky enough, and if you're skilled enough, and it's really a combination of luck and skill, to buy a property for 100,000 that's worth 200,000, we'll consider going 100 LTV. Again, we do that all the time. We financed fairly recently, actually paid off fairly recently, a guy who's one of our regular borrowers, a sharp guy, buys properties cheap, bought a property for, I think it was around 100,000, 150, something like that. It was a warehouse building near a major airport. It was a long story. It was a foreclosure sale, this and that. But we lent him 100%. We've done a lot of 100% deals for this particular guy, because he bought it what we thought was 50% on the dollar. We were thrilled to do 100% for him. He was thrilled to get it because he bought it lower than the market value. Again, when market value is a funny thing, don't be fooled into thinking the market value is what you need it to be. You really have to dig down deep. And it's sort of where the rubber meets the road. And I should make a whole nother video on market value. But again, I want to focus on the 100%. Another way to get 100% financing is buy a property substantially below the market value. So when we look at it, we say, holy moly, this is a no-brainer. We would have, and what we say is, oh, this guy did a great deal. We would have bought the property for what he paid for it. If we say that, then we're comfortable, and we think you can execute your business plan, then we may be comfortable doing it for 100%. Again, not all cases. If it's a rehab, again, every deal is a little bit different. So don't get upset if we don't do it, but I'm just giving you the broad brush. The fourth way, which is also common, is don't be afraid to bring in outside investors as JV equity or preferred equity or mezz, who put up the money. Or if it's a good enough deal, we'll put up the money. So again, you're buying a property for, let's say, $1 million. And let's say you think that property is worth $1.3 million, $1.4 million, but you still need some money down for it. And it's a good property. Maybe it's vacant. Maybe it's a retail center that needs work. Maybe it's a multifamily, whatever it is, it's a value add deal. And you need $300,000, $400,000. Don't be afraid to go to an investor and offer them a piece of the deal to put up money. Maybe they'll put up $200,000, $300,000, $400,000, $500,000, or whatever you need as the down payment, as the equity slug or the equity piece of the deal in the capital stack to put it up. Again, you're getting 100% financing. So don't be afraid to do it, or bring it to us. We do that. Again, we love looking for that. In fact, the past 6 months, year, we've been doing a major push for it. In fact, I was just working on a deal before I did made this video. I'll tell you a little bit about the deal. It's a perfect example. Guy calls me up. The guy is a nice guy. I know him very well. He's unbankable. Whatever reason, he can't go to a bank. There's a bunch of reasons. He can't get financing. But he finds a great deal with a great tenant in a suburb of a northeastern town. And what happened was we put up 100% of the deal. He didn't put up any money whatsoever. And we're charging a rate, self-understood, but we're also a partner in the deal. So the way this deal worked is he's getting 50% of the deal without putting up a dime. So you could say, oh, he's giving up 50% of the deal, but he's looking at it and saying, oh, I'm getting 50% of the deal. So when you bring in a capital partner to bring in the equity piece of the capital stack, you're going to have to give up something. But don't look, a lot of people, they're overcome with what they're giving up, and they wind up usually getting nothing that way. I forget the guy's, I think his name is Kevin O'Leary. I heard him tell a story, and it's a good story. I'll tell you. A dog has this dog bone. It's good, it's juicy, the dog loves it, and he's carrying it in its mouth, and he goes to the side of the river, and he looks down and he sees a bigger bone. And what he does is he lets the bone go in his mouth to go after the bigger bone. But the bigger bone wasn't there. It was an illusion. And that's what people do. Sometimes people are scared to give up to get. But don't be afraid. If you want to really be a real estate investor, you're going to need partners. So partner up with capital partners, whether it be someone you know, a relative, whoever it may be, or us. We act as capital partners in a lot of deals, and we're coming up with that equity piece. You're going to give up, but it's focused on what you're going to get. So the fourth way is bring in a capital partner or Gelt as a outside investor to come up with the equity slug. Again, we're not going to do it in every deal, but we do it in deals all the time. So I think I've given you 4 really, really good ways to get deals. Someone sent me an email the other day, and I thought it was fantastic. And it was like Saturday night at 11 or 12 o'clock at night, and I happened to respond to it. I think he couldn't believe I responded to it so quickly. But it was basically, I have no money, I have no credit, but I have desire. And he goes, I don't think you're going to want to do business with me because I'm a total mess on paper. And I wrote back, I said, you have the main thing. You have desire. So if you have desire, and that's what you really need. You could learn everything else. You could acquire the capital. You'll align yourself with a good capital partner. So if you really have the desire and the passion to do it, that's 90% of it. You'll get the knowledge, you'll get the capital. Believe me, the capital is the easiest part. I'm pitching Gelt Financial for equity and debt, but that's the easiest part. There's a million companies out there like us. You have to have the insight fortitude to do it. And you can't be afraid to get rejected 20 times or 100 times and to look at 100 deals and to really sweat it out and lose it, but you'll do it. So there are ways for you to get 100% financing. Again, to go back real quick, I'm going over my time limit. I really don't have time limit, but giving myself one. Blankets and cross-collateralization, seller seconds, buy below market value, and bring in outside capital, or let us be your outside capital. Again, 4 fantastic ways. I hope I helped you. Again, if you have the desire, that's the only thing you need. The desire. You can overcome everything else. You can get everything else. All the tools are out there today. You can do it. I know you can. And really, that's the greatness of the real estate business, that anyone can do it. Believe me, if I could do it, anyone can do it. I have no great skills. I'm a total mess. Anyone could do it. If I can do it and I did it, you could do it too. Like the YouTube channel, like the video. If you have questions, leave them. We try to answer the questions. Give us a call at 561-221-0900. Check us out at geltfinancial.com. And again, we're looking to do deals. We're looking to partner with good quality people. We'll put up the money. You don't need the money. You find the properties and you do the work. We'll put up the money. But again, that's not on every deal. And don't be discouraged if you call us up and you run us 1 or 2 buy deals and we say no, because we're seeing something in the deal that you're not seeing, and it's called experience. And the reality is we've lived through hard times, so everything's not great. We know what it's like to live through a bad economy, and that's really how we underwrite. Anyway, I want you to have a great day. Hopefully this YouTube video helped you, and take care. And remember, don't forget to like the YouTube, hit the bell or the buzzer so you're notified of more. Thank you. Have a great day.